Good morning, everybody. Sorry we're running a little bit late here today. It's time for our daily bites. My name is Bob Lang. It's April 27th, 2023. Great to be with all of you today. I was in New York for a couple of days. Did a video shoot on for Yahoo Finance yesterday. I was on the desk. Hopefully you guys had a chance to see it. Talk a little bit about volatility and zero DTE as well. And then on Tuesday night, I went to a great party for Brian Shannon, who some of you guys know, Alpha Trends, and wrote a new book called the let's see here, Anchored VWAP. That's it right there. Got a chance to buy it. Go ahead and buy it. It's a great book. You'll enjoy it. Brian's a great guy. Makes some really cool people there as well. So we got a short program here today, so let's go ahead and get started and talk about the charts. We see the futures are up real nicely. Got a nice bid in the market here today, thanks to some earnings news from Facebook, Meta last night. They call it Meta now. So a couple other names were actually posting some good earnings and some not so good. I saw MasterCard came out this morning with good earnings. Stock hasn't moved yet. Lilly also with good earnings. Caterpillar, not bad, but it's all on the price with that. Speaking of prices, we did see the GDP number came in along with some pricing numbers as well. And you can see it right here. This was a disaster for inflation, right? The Fed is looking to fight inflation. It's not happening according to these numbers in first quarter. Core prices 4.9 versus 4.7 expected, 4.4 last quarter. Look at the price index, 4% versus 3.7 expected. It was expected to come down. And then we see that the price index, this is probably a wrong number here, but we see the price index sharply higher PCE prices. And we do have the March PCE prices coming in tomorrow morning, a much more sooner, a more recent picture of what prices are doing. So look, this is the thing is that there's a reason why markets were weak yesterday after starting out strong with Microsoft earnings. Google came out with their earnings. Visa had good earnings. Chipotle very, very strong earnings on Tuesday night, and reflected it with a good day yesterday. But look at the Volt here. Okay, this is the internals that we look at every single day. The ADD down here, and the volatility was climbing up here. Now, of course, volatility is down a little bit this morning after some news has been released, and we see that again the futures are starting to push up. But put call ratio pretty high up here, 1.12, very notable. And then also we saw the concentration of some cumulative ticks that were real high on the negative side. I circled the green, but look at that. Look at that. And then hardly any buyers coming in on the Nasdaq. Even the Nasdaq was strong yesterday. Now speaking of the Nasdaq, I wanted to show you this chart as well. This is one I got from Tom McClellan, and this is one I talked about in the chat room just a little while ago and on Twitter. And notice the divergence here between the QQQ, which is in black, and the QQEW, which is the equal weighted, right? Now, all of you know that the QQQ, the Nasdaq 100, is a cap weighted index. So it's cap heavy. What does that mean? That means that the top 6 to 8 names in the Nasdaq are controlling the action, probably good for about 40%, maybe close to 50% of all the movement in the Nasdaq. So the Nasdaq is up this year because of names like Apple and Alphabet and Microsoft. Some of these names that are up real strong in 2023, that's the reason why. Meta, Nvidia, all those names, right? But when you look at the perspective of the Nasdaq from an equal weight as opposed to a weighted index, right? You see a different story shaping up here. In fact, if you look at the QQQEW, we see a negative divergence here. We see lower highs and coming in on this slope over here. We broke this trend line down over here, but we didn't break that trend line in the QQQ. So we have a divergence going on. Is that important? Well, if you look at past divergences, it has been a good signal or a good measure that markets are are going to turn tail, and Nasdaq would be turning down. Look what happened back at the latter part of 2022. We had this divergence. It was more of a positive divergence, right? Where we saw the equal weighted names, the strength of the rest of the index, not just the top 6 or 8 names. Every single name in the NASDAQ was performing well. You can see higher lows, higher highs over here. And that was the reason why we had such a strong performance in January, right? We saw the NASDAQ as a whole not performing well, but the equal weighted one was doing well. And that was a sign that it's time to get in. And that certainly the market launched at the beginning of January, and we can see both of those went up. But right now we have this negative divergence forming, and that we have to be very cautious about. We can also see the same divergence in the SPY and the RSP, which is the equal weighted S&P 500. As well too. So I also want to show you a couple of more charts here. I also want to show you, let's see here, this one here. So new highs, new lows. This is one that we've been tracking for a long time, and it's just from time to time you got to take a look at this thing. Look at what's happened now. We had a new lows, swamping new highs on Tuesday and also on Wednesday. So this is now on a sell signal. Okay, this is on a sell signal here, and we can see that certainly there is room to go down over here. And again, when you see lots of divergences like we've had in some of these other indicators, and the markets are just kind of saying I don't care, I'm just going to keep going up. That creates a lot of instability here, and it's going to be a lot of caution. A lot of these signals are starting to pop up here. One other one I wanted to show you here is one that we talk about a lot, is stocks above their 50-day moving average. That's another thing I talked about in the chat room a little while ago. And you can see that when we're in the box, it's no good, right? And what does the box represent? Anything below 50% of the names above or below the 50-day moving average. So I like to look at it this way. Here's this 37.8 are above their 50-day moving average. All right. I look at the flip it around. 62% of the stocks in the S&P 500 are basically in bear markets. I think any stock that you have that's below the 50-day moving average is in a bear market. All right. So we tried to make a move above there. We were there for about a month over here, but then we've come back down over here and confirmed it to the downside. And what do you do? I mean, what do you do with this? Do you wait for it to come down here and come down a little bit further? I say maybe wait till the RSI comes down to 30 on this indicator and see what happens then. But at that point in time, we could be market in correction. Speaking of that, IBD put market in uptrend under pressure yesterday after two days down. Listen, I think they see the same thing. I was talking with one of my friends over there not too long ago, and he said, look, just a few stocks are really pushing the markets upward. When I was on Yahoo Finance yesterday, I spoke with somebody in the green room, and I asked, what they thought about the markets, and they said, well, we could get another 10% correction from here, which would take you down to about 3,800, which is where we started in 2023. So I said, how about any further than that? They said, absolutely not. Off the table, nothing below 3,800 in 2023. So, of course, I started thinking, my contrarian mind says, interestingly, he's probably representing a lot of hedge funds out there, a lot of people out there who have a lot of capital, a lot of money at work in these markets from January, right? And so, we did have all those signals that showed up in January, the breadth thrust and all this other stuff. I don't know. I don't think so. But I do see this. Let's take a look at the Fed now. Off of those awful numbers that we saw in the in this price PCE and the GDP, right? What are the futures telling us? 85% chance of a rate hike in May. Basically a done deal. But let's take a look at June here. June's already showing 25% chance of another rate hike. All right, and this comes after 2 jobs reports, 2 inflation reports on CPI and PPI. So this comes out June 14th. So there's plenty of data to be coming out here, and again, tomorrow comes in with the PCE. It's the end of the month as well too. So I have a feeling that there's not, the market is not done going down here. We do have some support levels, of course, in the S&P 500. Let's take a look at those. We just broke the 20-day moving average, and then we have this 50-day moving average coming in. We talked about this one last week, didn't we? 40.33, not too far away from where we're at right now. And of course, we're going to open up higher this morning, but the highs yesterday are what? Much higher than where we're at right now. So the highs yesterday were 40.89. If we open up 20 right now, we've got 40.75 or so. So we'll see where things go. And of course, we have that lower high, lower low from Tuesday, from Tuesday, and then we followed through yesterday. We're mildly oversold here. All right, let's take a look at the oscillators for a minute, and you can see minus 174 on the Nasdaq oscillator, minus 141 on the New York Stock Exchange. We could go lower, and I think that as we head into May. Remember something, sell in May and go away. That seems to be a mantra that a lot of people tend to follow. I don't know if it works, all the time. It doesn't. Nothing works all the time, but I'm not sure if it's going to work here in 2023. But certainly, the S&P 500 has been down for the month of April here. We need a big save in on Thursday and Friday for the markets to be up. And then, of course, next week on Monday, when we have our next daily bites, we'll be looking at the monthly chart of the S&P 500, which was starting to, flatten out over here. The black line starting to flatten out, and the red line still coming down a little bit. So we do have some separation here still. 97 on the red, 52 on the black. We want to see that. If you're bullish, you want to see things go up. You want to see that spread narrow at the end of the month on Friday. So we'll be watching that. So thanks again, everybody. And again, sorry for the late start over here. I had to take a look at some of the data here in the PCE and the GDP. GDP climbed 1.1% in the first quarter, which is down from the fourth quarter of 2022. So, if we're heading into a recession, it's probably happening maybe this quarter, even the next. So I think the Fed was looking at maybe a higher quarter in second quarter. We'll see what happens. And keep an eye on the inflation. Keep an eye on the futures, the Fed funds futures, which are climbing. Eurodollar futures plunged this morning, which indicates higher interest rates are coming. Have a great day, everyone. I'll see you on Monday's Daily Bites. Enjoy and be careful. Keep some puts on. Remember something, we're still in a bear market. Talk to you guys later. Bye.